Hello and welcome back to Global Value. In today's video, we're taking a look at RH, ticker symbol RH. What's RH? RH, formerly known as Restoration Hardware, is a luxury furniture retailer. Why are we looking at RH today? Well, RH is very close to its 52-week low, and it's a position in the Berkshire Hathaway public stock portfolio that was a recent add this year. So RH makes up a very small percentage of the portfolio, only 0.2%. As of 90 days after the first quarter, RH was a $700 million position in the portfolio. But more importantly, Berkshire owns 10% of the business. So that means that Berkshire is above the reporting threshold for businesses. So if Berkshire decides one way or the other to buy or sell more of the stock, we'll get some closer to real-time updates about it. So because this position is under $1 billion, it's unlikely that Warren Buffett initiated it. It's more likely that this was either a position from Ted Wexler or Todd Combs, the other two investment managers at Berkshire, who each run about a $20 to $30 billion portfolio, meaning that RH is somewhere between a 2% to 3.5% position in one of their portfolios. At the time of recording this video, RH is trading for about $244 per share. Their stock price has had a very rough 2022 so far. They're down 55%. Over the past year, their stock price has been cut by nearly 2/3. However, going back almost 10 years, we can see that RH has returned 24% compounded annually. So with a relatively small amount of luxury stores in place, this business has compounded for a while, and it potentially has room to keep running. Their stock price got hit quite a bit during COVID, but then rebounded and was really one of these high flyers in the overall market. Prior to this, RH had actually been public in the 1990s and into the mid-2000s. The business was then taken private before being listed again as a public business in 2012. So as mentioned, RH is trading pretty close to their 52-week low. Again, they've been cut nearly by 2/3 from their 52-week high. The business does have a lot of short interest around it right now, with about 8% of their shares outstanding being sold short, and the business has about a $6 billion market cap. For some more background about the business, RH is a luxury retailer operating in the $118 billion domestic furniture and home furnishing industry. The firm offers merchandise across many categories, including furniture, lighting, textiles, bath, decor, children, and is growing the presence of its hospitality business with 13 restaurant locations. RH innovates, curates, and integrates products, categories, services, and businesses across channels and brand extensions, such as RH Teen, RH Modern, and Waterworks. The company is fully integrated across store, web, and catalog channels, and is positioned to broaden its total addressable market over the next decade with the launch of its World of RH digital platform in 2022, along with furniture offerings in contemporary, antique, bespoke furniture, couture upholstery, and more. As of January of this year, it operated a total of 67 RH galleries and 38 RH outlet stores across 30 states and the District of Columbia in Canada, as well as 14 Waterworks showrooms throughout the United States and the United Kingdom. The company was formerly known as Restoration Hardware Holdings, Inc. and changed its name to RH in January of 2017. RH was incorporated in 2011, but has its roots in a California retail business from the 1980s. RH is headquartered in Corte Madera, California. With that background, let's get into our fundamental analysis. We'll be performing a modified version of the 8-pillar analysis, originally popularized by Everything Money, taking a look at 8 different key metrics about the business to come to a holistic and beginning understanding of the business based on its financials. So let's get right into it. Starting off with pillar number 1, we want their average 5-year PE to be below 22.5. So to start off, we see some really crazy numbers here because of how their earnings fluctuated in 2017 and 2018. If we trim those numbers down, we see a more realistic valuation for the business. Currently, they're trading at 8 times earnings. They peaked in April of 2021 at more than 70 times earnings. And over this time period from October of 2018 to now, RH has traded for an average of 33 times earnings. So based on that historical average, that's going to be an X to start off with pillar number 1, although they're down quite significantly from their high. Pillar number 2, we want their average 5-year return on capital to be above 9%. Over the course of decades, a stock is going to return approximately what its underlying business returns, and the business is going to have this return on capital. RH does a great job here. They've increased their return on capital over this time period, and averaged out they earn about 20% return on capital in a given year. So that's our first check on pillar number 2. Pillar number 3, we're looking for 5-year revenue growth. RH has grown revenues from $2.4 billion in 2018 to nearly $3.7 billion through the first quarter of 2022. So that's another check there on pillar number 3. Pillar number 4, we're looking for 5-year net income growth. RH had negative net income in 2018, and when they reported at the beginning of this year, they had nearly $700 million of net income. So that's going to be another check on pillar number 4 as well. Pillar number 5, we want their shares outstanding to be decreasing. When you purchase a share of stock, what you're really buying is a fractional ownership percentage in the underlying business. When a business buys back shares, they're increasing your ownership percentage of the business, and ultimately they're increasing the percentage of the business's profits that you're entitled to. The opposite of this, shareholder dilution, happens when a business issues new shares, which decreases your ownership and decreases the percentage of the business's profits that you're entitled to. RH has diluted shareholders. They bought back about 3 million shares between 2018 and 2020. Since that time, they've issued an additional 7 million shares. So overall, RH has issued 4 million shares throughout these 5 years, and that's going to be an X on pillar number 5. Given their high-flying valuation, it's actually not a horrible thing that they issued new shares. By issuing shares at those prices, RH was likely to get some pretty good value by getting a lot of money for the shares that they did issue out. This is a potentially attractive sign of intelligent capital allocation by their management. Again, we can learn more by digging into the business's filings to really understand if management laid out their thinking over that period and learn what happened as to why their share count has gone up. Again, that's going to be an X on pillar number 5. Pillar number 6, we're looking for 5-year free cash flow growth. Free cash flow is cash from operations minus capital expenditures. It's this column here in green. Free cash flow is the lifeblood of any business, and it's ultimately what a business's valuation is going to be based off of. Free cash flow can be used to pay dividends, buy back shares, pay down debt, make acquisitions, or reinvest back into the business. Although it looks slightly cyclical here, RH has grown their free cash flows from $406 million in 2018 to $477 million in 2022. As opposed to some other retailers, the pandemic actually was a tailwind for RH. In a given year over this time period, RH averages about $325 million of free cash flow. So we'll use that number when we evaluate how the business is utilizing leverage and then how that free cash flow compares to their current market cap. Pillar number 7 is where we're evaluating how the business utilizes leverage. So we want RH's net debt, which is their long and short-term liabilities minus their cash and short-term cash equivalents, to be below their average 5-year free cash flow multiplied by 5. So as of the first quarter of this year, RH had $1.26 billion of net debt. So this is the liabilities that they had left over after using up all their cash. When we multiply their average 5-year free cash flow of $325 million times 5, that brings us to $1.6 billion. So if the next 5 years for RH is similar to their past and they produce average results over that time period, they'll have more than enough money to pay off all of this debt. So that's a great sign to see here that the business is not overly levered, and that's a check on pillar number 7. So far through 7 pillars, we have 5 checks. Finally, the big pillar of them all, pillar number 8, we want RH's market cap to be below their average 5-year free cash flow multiplied by 20 to give us a beginning valuation as to what to pay for the business. Multiplying it at 20 times free cash flow is going to be a starting point. Currently, RH has a $6 billion market cap. When we multiply their average 5-year free cash flow of $325 million times 20, that brings us to $6.5 billion. So that is nearly $500 million of margin of safety on a $6 billion market cap for RH. That's a great sign, and that's a check on pillar number 8. So just because we got a check there on valuation doesn't mean that you run out and buy the business. This type of analysis is holistic in nature, and we shouldn't look at just one pillar in isolation. At the same time, this is a starting point of determining whether it's worth your while to go out and dig deeper and learn more about the business. This is not financial advice, and it's not a recommendation one way or the other to buy or sell RH based on this analysis. Then, just as a note, RH does not currently pay out dividends. So in summary, RH checks the box on 6 out of 8 pillars. It looks like a strong and growing business that earns high returns on capital, has been able to increase their revenues, net income, and free cash flows, is not overly levered, and while it has diluted shareholders, it's done so at these really high nosebleed valuations where management was actually able to get a lot of money for the shares that they issued. So depending on if that was their intention and how they choose to allocate that capital that they raised here, that could be a very savvy way of allocating and raising capital. Finally, based on RH's free cash flow profile, the business does look very interesting, especially as it's come down from these nosebleed valuations and is trading more realistically in line with its earnings and its free cash flows. Again, the reason that we're interested in RH is that RH has been a position in the Berkshire Hathaway public stock portfolio since the third quarter of 2019, meaning that Berkshire held it throughout the pandemic and throughout these nosebleed valuations, and in the most recent 13F filings that were published for the first quarter of this year, Berkshire has actually added to their position. It makes up a very small percentage of the overall portfolio, but Berkshire Hathaway does own 10% of the business. So that's it for today's fundamental analysis of RH, Restoration Hardware, ticker symbol RH. If you enjoyed the video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at next time. Thanks for learning about RH with me, and have a great day.